Have you ever wondered how a digital currency, created by an unknown person, could potentially revolutionize our world? A curious question indeed, and one that has sparked debates, controversies, and a global financial revolution. Enter Bitcoin, the enigmatic creation of the elusive Satoshi Nakamoto. This digital currency is not just disrupting the financial world, it's radically redefining it. But how did it rise to such prominence? What's the secret behind its meteoric rise? The answer lies in understanding Bitcoin's intriguing journey to prominence. Bitcoin's story begins in 2008 with an anonymous figure known as Satoshi Nakamoto. This name, a pseudonym, represents the enigma who conceptualized Bitcoin and penned its white paper, titled Bitcoin, a peer-to-peer electronic cash system. This groundbreaking document outlined a digital currency free from the control of any government or institution, a radical vision that arose in the wake of the 2008 global financial crisis. The financial turmoil of that era, marked by the collapse of major banks and a deep-seated distrust in financial institutions, created an environment ripe for the creation of a decentralized currency. Nakamoto's vision was to create a system where trust was not necessary, where transactions could be verified without the need for a central authority. And then, on the 3rd of January 2009, the first block of the Bitcoin blockchain, often referred to as the Genesis block, was mined by Nakamoto. Embedded within the code of this block was a headline from the Times newspaper that read, "Chancellor on brink of second bailout for banks." This message served as a timestamp, but also a poignant commentary on the state of the financial system. Bitcoin was not just a technological innovation, but a response to the financial instability of the time. It was a statement, a new path forward in a world where trust in traditional financial systems was wavering, and thus Bitcoin, the first decentralized digital currency, was born. But how does Bitcoin actually work? The answer is blockchain. Now let's take a moment to demystify this complex technology. Picture a chain, each link representing a block. This block contains information, like a ledger, recording Bitcoin transactions. Every time a transaction occurs, it's added to a block. Once a block is filled with transactions, it's linked to the previous block, forming a chain. Hence, the term blockchain. The beauty of this design lies in its transparency and security. Each block is visible to everyone on the network, making it practically impossible to manipulate or forge transactions without being noticed. It's like trying to pickpocket someone in a crowded room with everyone watching. But it's not just about Bitcoin. The potential applications of blockchain extend beyond cryptocurrency. For instance, supply chain management can benefit from blockchain by providing a transparent and unalterable record of product journeys from factory to consumer. In healthcare, patient records could be securely stored and updated on a blockchain, ensuring privacy and accuracy. Blockchain technology also has the potential to revolutionize voting systems, creating a more secure and transparent process. Imagine casting your vote from the comfort of your home, with the assurance that it can't be tampered with. Blockchain is more than just the technology behind Bitcoin. It's a new way of recording and verifying information, with the potential to transform industries and the way we do things. This revolutionary technology is the foundation of Bitcoin's functionality and security. Bitcoin mining is an essential process for the Bitcoin network, but it comes with a hefty environmental price. This cryptographic endeavor, which validates transactions and secures the network, is powered by a multitude of high-performance computers. These machines, in their relentless pursuit of mining new Bitcoins, consume an astronomical amount of electricity. In fact, the energy consumption of the Bitcoin network is on par with some nations. To put it into perspective, Bitcoin's energy usage is comparable to that of the Netherlands, a country of over 17 million people. This isn't just a matter of paying hefty electricity bills. The environmental impact is profound, as a significant portion of this energy comes from non-renewable sources. The carbon footprint of Bitcoin mining is indeed substantial. Given the urgency of climate change, this is a contentious issue that prompts serious questions about sustainability in the world of cryptocurrency. Bitcoin's environmental footprint is a growing concern that cannot be overlooked. From being a digital currency to a controversial asset, Bitcoin has made its mark. This cryptographic innovation has woven itself into the very fabric of our global economy, sparking debates and stirring the curiosity of many. Bitcoin's real-world usage is diverse. It's not just a speculative asset hoarded by investors. It's also a digital currency used for transactions. Some businesses, big and small, have started to accept Bitcoin as a form of payment, and there are even Bitcoin ATMs popping up around the world. Yet, Bitcoin's journey hasn't been without controversy. The volatility of Bitcoin has been a subject of much debate. Its price swings can be so wild that it could be worth thousands more or less within a matter of days, or even hours. This instability has led critics to question its viability as a currency and its suitability as a store of value. Regulatory issues also pose a significant challenge. As governments around the world grapple with how to regulate this decentralized asset, Bitcoin finds itself in a limbo of legal uncertainty. This has implications not just for Bitcoin itself, but for the broader cryptocurrency market as well. Moreover, Bitcoin's role in enabling illegal activities has been a contentious issue. Its anonymous nature has made it an appealing choice for those engaging in illicit activities such as money laundering or the purchasing of illegal goods. While it's important to note that Bitcoin isn't inherently illicit, its misuse has cast a shadow over its reputation. But despite these controversies, Bitcoin has gained acceptance in mainstream finance. More and more financial institutions are starting to embrace it, offering Bitcoin-related products to their customers. This is a significant step towards its legitimization, showing that it's not just a fringe asset, but a player in the global financial arena. Looking forward, the future of Bitcoin is as exciting as it is uncertain. Will it become a universally accepted form of payment? Will it replace traditional currencies? Or will it remain a volatile asset, subject to the whims of market sentiment? These are questions that only time can answer. Despite the challenges, Bitcoin's journey is far from over. Its global implications are still unfolding, and the world watches with bated breath.